Okay, recording this video Tuesday, 21st February 2012. It is just coming up to 2:04 p.m. Chicago time. Hope you had a good day's trading today and enjoyed your long weekend. Well, I had a nice one shot, one kill this morning, out for 4. Kind of done my trading pretty early, which was kind of nice. And we had one of those really kind of nice, almost picture perfect type of days in terms of setups with the better indicators. And I got this great email today, actually a series of emails from David R. over the last couple of days. Very generous in some of his comments, so thank you so much, David, for those. But it was kind of cute, so I'm just going to quote from it for a little bit. Barry, are you sure you didn't go back in time and give yourself the S&P 500 E-mini stock charts from the future? You know, like how in Back in the Future old Biff went back in time, gave himself young Biff the sports results almanac over the past century. I hope we all remember that movie. Anyway, so it kind of goes on. What I particularly like is the language that he's using is, I mean, it's kind of paralleling some of the things that I say. It's really nice to hear, and it's like, you know, maybe what I see in the market is kind of, you know, catching on. So for example, support cycle generated, exhaustion selling, professionals getting out, amateurs getting wrong-footed, first bullish divergence, quick retest at the bottom, support with less selling, another bullish divergence, bang, another quick fall if you get out right when the professionals start taking profits again, blah, blah, blah. So kind of David kind of goes on like that. It's a very cute email, so thank you very much, David. And you know, today was one of those days, range-bound kind of days. I think the better indicators do actually, you know, show turning points pretty well. If you have kind of runaway markets, that's when things, you know, it tries to see too many tops and bottoms. But in a day like today, it did work out well. So let me just run you through the 1500 tip bar chart here. You can see beginning of the day, bearish divergence, first bearish divergence, flush patterns here, cyclical resistance kind of comes in, whole bunch of blue professional bars at the beginning of the day kind of getting positioned, and then we kind of sell down here. I didn't get short on this move just because I would have liked to have seen the blue professional bars on these up bars, but professionals get back in. We get exhaustion selling, pro signal exit kind of down here, blue professional bars kind of come down. We test, first bullish divergence kind of comes in here, and then we have this little test move actually on the 500 tip bar chart. This was amateur down move, and then the professionals come in, and as soon as we break, you know, we break into a nice little trend move on the 1500, so it runs to pull back to end of trend, and that's where I got long at 60 and out at 64 just here. And then, you know, this move kind of finishes off with pro signal exit up at the pullback to end of trend, and bullish a bearish divergence up here. And then you can see this is the classic little, this is what is a really nice low risk kind of entry point. Amateur up bars into a cyclical turning point, second cyclical turning point after the end of trend. So the amateur up bars kind of here getting wrong footed, bang, we go into this really steep decline, you know, from the 64s down to the 56s. So nice 8-point kind of move kind of down here, and then at the bottom down here you can see we've got this little spike down, Rambo pattern, so we're starting to find some support, but you know, we've got to find pullback to end of trend on the 1500 tip bar chart. So not huge, you know, that was a good kind of range move, 10-point kind of top to bottom here. Prior to that we hadn't had a decent kind of in terms of points range kind of going on, but anyway, that's what was happening in terms of this kind of chart. And if you look at the higher time frame tip bar chart, 4500 tip bar chart, this was kind of playing into support down there and playing into resistance down there at the 60s and up at the 64, 65 type level. So we've come down to another kind of support area, exhaustion selling and so on. So we're just, you know, after last week's activity where we kind of broke away into this strong uptrend into the 60s, we're just kind of consolidating a little bit around here. Now, because I've quoted so heavily from David, I owe him a couple of answers to questions. The first one was on this 4500 tip bar chart. He's looking at this point here and he's saying, why was there not a bearish divergence signal there on that kind of retest? He called it kind of a doji type pattern up here. At this retest of these highs. And good point, you know, we'd had our exhaustion buying back here, we kind of tested back up, and that looked like a perfect little place where you might get a bearish divergence signal, and it kind of sold off. And to be honest, you know, I don't know the answer to that. You know, you write the code and try not to optimize it at all, and so, you know, sometimes when you think, you know, you might get a bearish divergence pattern, it doesn't kind of show up. It doesn't rely necessarily on the price kind of breaking to a new high with weaker buying. Just as an example, here's the bullish divergence signal kind of earlier on in the piece where, you know, it was made at not lower lows. So David, I apologize, don't know the absolute answer for that, but good good point out that that does looks like a bearish divergence call kind of there on the 1500 though was quite nice in terms of setting up this down move. And then the second question David asked was in terms of what do I happen to do between trades while I'm in a trade, because there's quite a lot of time sometimes between video kind of clips, and I do a couple of things. I mean, it would be last year I found that the market was moving so fast, you could be done in 40 minutes and you had to have your wits about you so that you were looking at every single bar, seeing the activity kind of intra-bar and when it closed, on the 500 tip bar chart with kind of amateur and professional bars, kind of reading what was going on. So, because the market was moving so quickly and in kind of bigger range moves, there wasn't time to do anything but kind of look at the charts. But I've had a slower kind of type of year so far, so there's been a little bit more time between trades. I do a few things. I have my Google Reader open, which is subscribed to a whole bunch of different feeds. I like looking, obviously everybody loves Zero Hedge, Big Picture with Barry Ritholtz, Business Insider. I've got a bunch of Google searches looking at various analysts that I kind of follow and seeing what they're kind of saying at the moment. I also watch videos on YouTube. Got a bunch of, if Max Kaiser's got anything to say, I'm always kind of, keen to watch his stuff. It's very amusing and insightful. And also kind of I do some emails when I kind of can. So I suppose, it'd be nice to say, look, focus 100% of your attention on the market kind of going forward. But actually sometimes, just distracting yourself and letting the position run is better. If I overthink, I'm always prone to jumping in and out, and a nice little swing move can always, for me, turn into a choppy, 3 scalp kind of move, because I'm becoming a little bit too close to it and getting nervous. And so sometimes just distracting yourself a little bit is kind of a good thing. So I don't know, it depends on how fast the market's moving, and sometimes just putting your mind on something else. Just to make a point though, whatever I'm reading does not impact directionally what I think the market is doing. I just read this stuff for interest and understanding kind of the big picture in the background, but it's got absolutely nothing to do with direction of trades that I'm taking. I'm just taking trades based on setups on the indicators, and I don't let what I'm reading impact my feelings about the direction of the market at that time. So just to make that kind of clear. Anyway, so I might put that full quote up from David on the website, because it was kind of cute. Anyway, hope you had a good day's trading. I'll tack on the one-shot one kill that I took this morning. Long 60 even. Long 60 even. Checking my stops and targets. And the reason for getting long here, we just had a test back down, amateur down bar into 59. Blue professional bars come in. And breaking the highs of that blue professional sequence there. Exhaustion selling on the downside. It's pretty big reading. It was about 19,000 on the downside. It's almost like a gap fill back down to kind of these levels on the Friday. Bullish divergence kind of came in, missed this whole setup here. Short flush signals, just because the blue professional bars seem to be kind of, we didn't have them kind of going up taking profits here. They just kind of got into the short move and just forced it down. So anyway, we kind of run 4 points pretty quickly down to the 59s. So I know we didn't get, that would have been nice to have been like an amateur down bar here on 1500, but let's see, we kind of got this on the 500. Looks like we were going to go to break above the resistance. So just long 60 even. 4 minutes later we just tested down at 59s. Blue professional bar kind of down here and broke above the high of that, kind of kept going. So broke out pretty swiftly above 60. So let's see. The thing I don't like about this is these kind of lining up. Normally there's some kind of sell-off type signal that's kind of midway between the bullish, the divergence signals and the exhaustion signals. So let's see. Next time we get kind of resistance might be around cyclical resistance on 500. Let's not hope for too much of a test down. Okay, a few minutes later, here we go, 61 and a quarter. Just had a little bit of weakness, kind of coming down to 60. Blue professional bar kind of steps in, and that kind of move down was actually this kind of blue professional bar. We come all the way back up to 60, kind of breaking through. So we've got resistance Here 500 support's just come in, but resistance on 1500. So here we go, we're breaking above that. That's good. And this little consolidation pattern of blue professional bars underneath that breakout level is kind of good. That's like jumping the creek. So we didn't kind of test down, or at least not yet. So at least the lows of these blue professional bars are kind of holding. So that's not kind of profit taking here. We've got this swing on the way. So blue professional bars kind of coming on the 45. So I think we're going to test back up, certainly to targets at 64, which is a nice kind of spot, because that's where we kind of almost got to earlier on today. So let's see, a little bit of weakness with the rainbow pattern, so I might kind of just come back again, but still holding long. See, a few minutes later, rainbow patterns just kind of gave us a little bit of weakness, kind of for a short while. And we're just broken back up through resistance here, so through resistance on the 500, so could be well into an uptrend here. So pull back to end of trend sequence on the 500 would kind of line up nicely with cyclical resistance on the 45. So hoping to get to 64s, bit of profit taking up there and get out on the target. Let's see. Okay, we just broke up to 63, which is good. We had exhaustion buying on the 500 tip bar chart, which is good as well. Still looks like we're in an uptrend here. Pull back to end of trend we've got to make. Previous high for the day up here was 63.5, and this little peak was about 64. So having a target at 64 is good. At least that's a place where we'll find some technical weakness. But let's see, we might. Oops. Okay, 63.25s. So here we go. So might find a little bit of weakness just here. It's kind of looking a little bit parabolic there, kind of temporarily, but no blue professional bars on the way up here yet, so it's holding on. Just out 64 even. For 4, excellent. And big reading on better momentum, 16,000 here, and 2 exhaustion kind of buying signals on 500. There we go. Exhaustion buying, blue professional bars kind of come in at the highs there. That'll be, I would have thought, a pro signal exit. Excellent. And so pull back to end of trend's got to come up on the 500 tip bar chart. That'll probably sync up with a cyclical resistance here, and we'll see where we go from there. But that was good. That was at 9:39 a.m. Excellent, excellent. So one shot, one kill for Tuesday morning, which is not bad. First trading day of the week. So I just noticed this reading, 23,000 better momentum. Yeah, that ran. It got pretty parabolic there for a second. Anyway, I might leave it there. Hope you traded well today. Quite a while later, we finally get pulled back to end of trend on the 500 bar chart around this 64 level. So it kind of plays in with cyclical resistance on 45, exhaustion buying up here. So we've had exhaustion, selling, exhaustion buying. I think we're just kind of stuck a little bit below, above resistance on 1500. So whether we're in an uptrend or not, I think the market's trying to decide. So kind of see how that kind of plays out. But just interesting. There's a nice kind of setup here. So bullish divergence kind of comes in. We test it with this Emini down bar. We just got in on the break of that high. And then we test it again with a little blue professional bar, support holds, and we just rock it from there. And then you got these little kind of points of weakness along the way. The blue professional bars kind of come in, they buy the breakout, bang, take profits up here. So anyway, there we go. That's how this thing played out.